Hi everyone, I hope you're well. This is CoinsKid. Just going to dive into Harmony One right now. Just before I begin, thank you once again for your continued support across the channel there. It's fantastic to see all the comments that we're receiving across the channel. It's very heartwarming as well. So we do really appreciate that. It's really good, and it's a greater value that we are giving you the skill sets and the tools to sort of keep marching on and keep moving forward in this space, because obviously it can be a bit bewildering to anybody entering the space, and the entire space has got so much to it. Okay, crypto is an evolving space and an evolving technology, and people think that crypto is like Bitcoin and that, but it's not. There's so much more to crypto and what it's trying to do, and paving the future for future projects and generations, and systems and stuff like that that's being built on the blockchain technology there, which is a revolutionary technology. So don't just buy it and sort of sit on it and think, yeah, try and learn and try and educate yourself. And I hope that what you're watching right now is bringing you a level of education, which is good. So it's all good. It's all good. I hope you have a really good Sunday. Okay, so diving into Harmony right now, you can see that we did, unfortunately, I said to you yesterday, we hopefully get that repair where we form this, we get the pullback there. Okay, this is a 4-hourly time frame where you get that pullback and you get the slingshot to take you up. But unfortunately, you can see we've actually formed the bearish cross, and there's no getting away from that bearish cross. Okay, and you would, if you're familiar with all my other videos, I'm going to be honest with you, when you get a bearish cross like that, okay, you don't usually see a bullish cross almost immediately. It's very, very rare. Okay, very rare. You do usually get the bearish cross, and then you do sort of hit a downtrend, okay, until you can find a reversal, then form the bullish cross. So effectively what I'm saying is I would be very surprised if one was to sort of get a comeback here, okay, and sort of curl around and then repel and get that bullish cross. So bearish cross is not a good thing. Okay, 4-hourly time frame. I'm not going to lie to you. What we'll do, we'll go down and we'll look at a previous bearish cross. Okay, so as you can see here, yeah, you got your bearish cross, right, and then you got the 23rd of February there when you got the bearish cross, okay, and then you next got a bullish cross on the 27th. So it took 4 days. So you're looking at a 4-day level of a correction there. So effectively, you're looking at a very, very similar pattern to this. At the moment, it might be invalidated, okay, but you are potentially looking at a very similar sort of correction that we've seen there, which was last month, okay. So unfortunately, you've gone up, you've made your top, you've come back down, you've got your base, and then you've gone up and you've made another top, and you are breaking down. And you can see you can't get away from the fact that you've made the bearish cross, which again is more selling pressure, is pushing you down. When you start to come back up, you're hitting your head, hitting your head, hitting your head, and it's going to push you. Not financial advice and not guaranteed, because you may see a really good reversal here, okay, because the market is strong, but sometimes you just got to see what's in front of you and you can't ignore it. Bearish cross, pushing you down, you're at a really key level of support here at the moment, okay, and you do know the target that if you lose that level of support, you are looking at a potential further correction down there, as you can see just there. And I will zoom out in a moment to make it a bit clearer for you, but at the moment this is not healthy, okay. I'm going to be honest with you, it's not healthy. We was hoping for the pullback. You get like an EMA retest where it pulls back, it pulls the EMAs back, and it slingshots you up. It gives you a massive pump, okay, to take out this high, because that's what Harmony needed, because it's gone up so much and it's done so well, okay, it needed that sort of slingshot to get back up there. But at the moment, you can see you've been in this continuation trend where you formed a bullish cross after this correction, come down, got back above the EMAs, consolidated sideways for a bit, and marched on. So the level of this consolidation here, because you could effectively time it, okay, so this particular level of consolidation here where you made the high before you made another bullish cross, okay, was just there, and that took approximately 2 weeks, 15 days, okay. So again, you could say, okay, well, how long did it take me to make the bearish cross from the high? The bearish cross took you 9 days. Do you see that? So you made a bearish cross after 9 days of making a high up there. So what we'll do is go back up to the chart, and you can say, okay, well, we made a high just there, and we've gone along and we've literally made a bearish cross after 10 days. So you're looking at a very, very similar sort of breakdown at the moment, unless Harmony can find itself, okay, unless it can find some steam and pick up. You are looking at a very, very similar pattern to what's played out here. This level of consolidation, this breakdown where you lose the double M top, you break down, okay, let's remove that for you, you break down and you hit that target there. Do you remember how we set the target there? So basically You go from the top there and you've got that 28% correction, and then when you lose the support, okay, which you lost the support just there, this double M top pattern, when you lose it, you've got like the 28% correction. That was a little bit further because you got the wick down, but in all, it was just there like 28%. So if you'd have set a short, you would have been in profit. You would have, you take profit set at the appreciation there, because that's how it works. I've already shown you in the video. Okay, so at the moment you are looking potentially on the cusp of a very similar setup to that. Okay, where you're going to break down, you're going to come down, you're going to test the level of support, and then you're going to march back up and get back above the EMAs. Take out this support now, this as resistance, take it back as support, and march onwards and upwards. Perfectly healthy, perfectly healthy. I want to reassure you, it's perfectly healthy if it was to do that. Okay, because you can see it goes up, consolidates, goes up, consolidates. It has to. Okay, goes up, consolidates. This is a daily time frame. Where look where your EMAs are. Look where the EMAs are. Bullish cross. Okay, up, consolidate. Up, consolidate. At the minute you were getting very, very extended and really far away from the EMAs, and this believe it or not, this actually helps towards getting to these price levels, because if you don't slow down, if you don't come back down and reconsolidate and retest some of these support levels and refuel these rocket ships, you are looking at that sort of vertical parabolic upwards trajectory for Harmony One, and when it does that, that's a massive indicator of the end of the bull run and the end of the market, because it's called euphoria. Okay, and it's just massive correction. You can get really caught in it really quickly, where you just cascade of selling, and it comes down so fast, and you're falling through all the EMAs. You're not holding at support. You're falling, and you've gone to oblivion. And it can happen in a day to 2 days to 3 days to whatever, and it just does come so quickly. So, you know, I just want to reassure you that what is happening here, it's not the end of the world, and it is just effectively a level of retest of support and consolidation. That's if it does happen. You know, you will get confirmation that it is on the cards. If you get that close today below this level of support, okay, see this level of support, if you do close today below that, then you would be potentially looking at that further correction down there to test a basically as the 55 EMA creeps up as well, you sort of sneak down to it. You might see a little wick down to it. Okay, I wouldn't imagine it'd fall any lower than that, but that is your absolute, you know, level there. That potentially, that I'll be honest with you, my trade would be that if Harmony was to close below this now, you see the green candle closing below this level of support, I would open a short on Harmony, okay, and I would have my take profit set down there, my TP down there. Obviously I would set a stop loss as well, just in case it was a bit of a fake out, and because you do get that as well, you know, it looks like it's collapsing, losing support, and then all of a sudden it gets picks up and just carries on. So that's basically Harmony One at the moment. Keep an eye on this level of support. You can't lose that 06038, roughly around that sort of area. As you can see, that support in the middle there, and you would see that further correction and breakdown for Harmony One. So hope that has keep you updated with what's going on with Harmony One today, and do stay safe and stay strong. But you know, you can equally make money on the way down as you can equally make money on the way up. It's a lot easier to make money on the way up, obviously, because you buy and hold it, and it goes to the beach, so to speak. But you know, for those of you that are not into sort of trying to work out the tops and the bottoms, yeah, you're doing well. Just keep holding it, because at the end of the day, you know, it's just going to do something like it did here. Okay, don't panic. It's just going to do something like it did here. If it does do that, where you're going to lose that, it go down, sort of get that W bottom sort of thing, and then march on. Very similar pattern to what happened there. Stay safe, stay strong. Still all good. Still in a bull market. Still bullish overall. Take care. Bye bye.